I was guilty of believing this, so I want to tell you the truth right now. There is no such thing as a magic strategy that wins 100% of the time. But what we can do as traders is create a system that can provide us with an edge that plays out over time and gives us consistent profits. Let me tell you a quick story. Towards the beginning of my trading career, I decided I was going to trade just using price action. Turns out it didn't work very well. I was a break-even trader. I then decided to switch to the next thing that I knew, which was using moving averages by themselves in order to trade. Again, break-even trader. One day I decided to combine the moving average that I saw perform the best throughout all of my testing with the price action strategy I was already using. And from that day forward, everything changed. I went from a break-even trader to someone seeing consistent profits in his account. So in this video, what I want to do is share with you a trade I took on the Aussie dollar using this exact setup, along with share with you the exact rules of this trading setup. That way you come away from this video with a better understanding of how to use price action in combination with a very specific moving average in order to create highly profitable trading opportunities. So if you feel like learning a new setup today, go ahead and click that like button for me. Go ahead and subscribe if you are new, and I'll see you after the intro and disclaimer. The first thing you have to understand in order to utilize this trading setup in your own trading is the way price moves and the specific movement of price that we're looking for before looking for a trade. And the first thing we're going to do so that you do understand that is we're going to go up here to a whiteboard and I'm going to explain it. Before I do, I know my voice is a bit raspy. I just got over being sick, so take it easy on me. Let's go ahead and take a look though at what we're looking for in terms of price. When we're looking at a trending market, which is what we're going to utilize in order to take advantage of this setup, is we're going to be looking for higher highs and higher lows, followed by another higher high. This is really all I'm looking for. This is what I call a 1, 2, 3 move, and it just consists of a push up in price, a pullback, and then a push up that breaks above the previous resistance. This is the very first step of this strategy, and as soon as I see this, I start to look for this setup. So the next step, after I see this trending move in price, is I'm going to be looking for price to then push back down, give me a pullback that comes to this area of resistance that is a zone. It's not necessarily one line on the chart. We're going to be looking at this zone, and this zone is likely to provide a bounce higher. Let me explain why that's the case. Whenever price is moving up and we have a push up, we have sellers that come into the market right here. That's the reason we get a pullback. The buyers are losing steam. Sellers are coming in trying to push price lower. So when buyers take back control, the sellers don't expect that. When they take back control and push higher than the previous highs, that means that buyers are actually in control, because where buyers gave out last time is no longer where they're giving out now. They're pushing prices higher, and no matter how many sellers come into the market, they can't stop it. So with that being the case, whenever we get a pullback into this area, if you were selling short, let's say those people didn't have a stop loss in place at all, well now they can get out near break even, or even at break even if they were able to go short at this top. So we're catching those orders of people that were scared, that went short because prices were going higher, and now they're like, I'm getting out of my position. When you get out of a sell position, you have to buy. And we're also getting more buyers stepping into the market. So all that equals buying pressure that more often than not pushes prices into new highs. So again, let me break it down one more time. Step one of this strategy is we're looking for a 1, 2, 3 move, which is just a move followed by a pullback, followed by the break above the resistance level or the previous swing high. We're then waiting for prices to pull back to the zone of that previous swing high. And that is the first step of this strategy. And obviously this is for a bullish trade. We'll go over a bearish example later in the video. Now let's take a look at this on some real charts so you can get a better handle of it. What do you see right here on the Aussie dollar? Hopefully you were able to spot this 1, 2, 3 move. We have prices pushing up to a high, pulling back, then pushing up to what? A new high. Does this look familiar? It looks exactly like what I drew up on the whiteboard, right? So we have a 1, 2, 3 move. What's step number 2? we're going to create a zone. Again, it's going to be a zone. I don't have any specific rules for this, but this is just a zone where the previous level of resistance that was just broken. That previous swing high, we have to have a zone in there because this is where more buyers are likely to come into the market. This is also where people that sold here got really scared as price pushed up. If they didn't have a stop loss in place, this is their chance to get out at or near break even. So if they had a sell trade on, they have to buy in order to get out of that sell trade, which is going to automatically push prices higher. When you combine that with more buyers coming into the market, that's when we can see moves that push up into brand new highs. So the first two steps of this strategy are already in place here on the Aussie dollar. And now that you know the price action side of things, I'm going to go ahead and let you in on the specific moving average that I combine with this type of trading in order to create some highly profitable trading opportunities. The moving average I use for this trading setup is probably one of the most widely used moving averages in trading, which may be why it works so well as a level of support. So simply put, it is the 50 period exponential moving average. You can find that just by going to indicators, typing in exponential. If you can figure out how to spell that, it's tough for me. And then it'll be the top one that says moving average exponential. Apply that to your chart. Once you do, you'll just need to go into the settings of that indicator and you'll go to inputs and type in 50 for length. That's all you need to mess with. Just change the length to 50. Then you will have a 50 period exponential moving average on your chart, which is the blue line you see on my chart now. So in combination with the price action setup you have already learned that we've already talked about, utilizing this 1, 2, 3 move and the buying pressure coming in on the pullback to the previous resistance, this strategy by itself can work. But again, when I was using this by itself, I was like a break-even trader. I wasn't making money, I wasn't losing money. When I decided to combine this with price must be bouncing off of the 50 EMA as well as an added condition, that's when I initially started to make profits as a trader. So with that being the case, this is a third condition. If you've been around the channel for a while, you know how I like to create and utilize strategies. That is through an acronym I call CEST, C-E-S-T, which stands for conditions, my entry reason, my stop loss, and my target. So for this specific trading setup, the conditions are our 1, 2, 3 move and the pullback. And this pullback also needs to be coming into the 50 period exponential moving average. Now, I have very specific rules of when I count this 50 period moving average as support. As long as candles have been above the 50 period moving average and are still touching the moving average, I count it as support. Let me give you an example of what would not count as support. If we have the moving average continuing and we have a candle that does something like this, but we're still touching the moving average, we've closed below it. Let's say this candle's red, but we're still touching the moving average, then I still count the moving average as support in that specific case. Here is when I stop counting the moving average as support. If we have a candle that closes below the moving average and also does not touch the moving average at all. At that point, I no longer count the moving average as a support level and I move on to other currency pairs and try to find another trade. So this is the point when I stop counting it as support. Felt like that was a detail that I needed to share. So let's go over this one more time. We already have now the conditions for this entire trading setup. We have our price action that we've talked about, the 1, 2, 3 move with the pullback. We have the condition of price needs to be touching and coming off of the 50 period exponential moving average. So now we have all the conditions met for this trading setup. What's the next step? If we're going by our acronym of CEST, then that would be our entry. It's very simple for me. The entry is buying pressure. Buying pressure can come in many forms. Candlestick patterns like a engulfing bar or a hammer candlestick for buy trades, a close above candle, a candle just with a long wick to the bottom and a really big green bar would be an example of buying pressure. When you go backtest this, feel free to backtest multiple entries all at once or multiple entries separately, but make sure you're really specific about those entries. You want to make sure it's just engulfing candles, and that's what you're looking for, and it's super specific. You have rules for those candles because one of the leading causes of inconsistency in traders is that they don't have specific rules for an entry. So be sure you have specific rules for that. I just call it buying pressure, and I have rules for what I count as buying pressure. One of those rules I just told you. It is a long wicked candle with a large green body. So this candle right here, just utilizing this candlestick pattern on top of what you've already learned as the entire setup, is my actual entry. This candlestick, once it closes, is when I actually press the buy button for this specific trade. So where are we in the acronym now? We have C taken care of. We have our entry taken care of. What's next? We're gonna need to look for our stop loss. You need really specific rules for this as well in order to stay consistent to a trading strategy. So let's create consistent rules for a stop loss. For me, that's gonna be just below our entry candle. On this specific trade, this is exactly where my stop loss was. You'll see that in just a second. And after we look for a stop loss, C, E, now we have S, all these are checked off. We need to know where we're getting out if we're right. Our stop loss means, oh shit, I was wrong about that trade. Cool, let me get out. My risk management's on point. I only lose 1%, maybe 2% of my account. I'm cool with that. It was worth the risk to take that trade, but where are we getting out if we're right? That's something we need to determine as well. For me, that area is normally the next level of resistance price will hit in the uptrend. So if we're in an uptrend, we've already made our 1, 2, 3 move. The likely scenario is that we break into new highs above this high. If we do that, what's the next level price is going to see resistance at? Well, it's the next level of resistance price has. So with that being the case, that is where I put my target. Now, an important note here is once I hit about a 1.4 to 1 reward to risk ratio on these trades, on this exact setup, I do normally move my stop loss from where it is to break even, right at the 1.4 to 1. And then I just let the position ride to that next level of resistance, which is exactly what I did on this specific trade. If I hit play, you'll see that price did in fact push up high enough to hit our targets, and we got out just in time right before the crash of the Aussie dollar. Now I'm going to go over a bearish example of this as well, but before I do, I want to show you that I did actually place this trade. So if you'll look to my left, I think, or to my right, whichever way, you'll see a screenshot of the email analysis I sent out to everyone involved in the TTC Forex University. I send these trades out 2 to 5 times a week. If that's something you're interested in getting involved in, it'll be the top link in the description. The university includes a full university style course meant to take you from beginner to advanced as a trader. Along with that, it includes these email analysis trades a few times a week of trades I'm actually placing based on what you're learning inside of the university. And on top of that, it includes priority coaching support, which is me answering any trading related questions you have personally to ensure that your journey from wherever you are to profitable trading is as smooth as possible. Again, that's linked at the top of the description, or go to www.ttcfxuniversity.com. If not, that's completely fine too. Let's take a look at a bearish example of this setup right now. Take a look at the screen and see if you can spot the bearish trade now. So hopefully you were able to spot all of this, but at the moment we have a 1, 2, 3 move on the euro dollar. This move is coming in like 1, 2, 3. After the 1, 2, 3 move, 1, 2, 3, where are we looking for possible trades? At the previous level of support. And by the way, if it's a level that's been tested multiple times, that makes it an even more accurate trading opportunity. So at this point, we have our 1, 2, 3 price action move. Do we have a pullback? 1, 2, 3. The pullback is coming into the previous level of support. So yes, we have a pullback too. What's the next step? We're going to be creating a zone in our previous level of support, just like that. And we also need what to be happening? We also, even with the pullback coming into the structure level, right? Even with that, we need it to be aligning and also pushing off of the 50 EMA. This is for a bearish example. We need it to be pushing off to the downside. Obviously, we're trying to go short here. We're selling the market. So do we have that in this example? If we zoom in right here, this candlestick touches our zone and also comes off of the 50 EMA. So yes, we have a good example of that here. Now we have the conditions met for this strategy. What's next? What is the entry? Selling pressure for a selling trade instead of buying pressure like a buy trade was. For a short example or a selling trade, we're going to be looking for selling pressure. And the way we're doing that is with this candle right here. We have a shooting star candle with a really long wick to the top side that closes below the previous candle. So with that being the case, we have all we need to actually enter this trade. So that specific candle would be my entry reason. I would go ahead and enter on the close of that candle. I would go right above the candle or right above the zone, probably in this case. And I'd be looking at the next level of structure. I think I already have it pointed out. Yeah, I'd be looking at the next level of structure for my targets, moving the stop loss to break even at around a 1.4 to 1 reward to risk ratio. Let's see how this specific trade plays out. We push down, push up a bit, and then eventually do in fact come down to hit those targets. So this would be a good example of a bearish version of this exact trading setup. So I just did an experiment and the results were way different than I expected. I blasted out an email to our entire email list, which is thousands of traders, asking them what their number one issue in their trading was. I was expecting an answer somewhat similar to, I don't have a strategy. What we got back from that was something way different. I actually had my assistant write out all the answers into an Excel spreadsheet, which, bless her heart, because that was so many emails, had to be a lot of work. But we then organized them from the most popular answer to the least popular answer. The most popular answer by far was they had a problem staying disciplined and sticking to one trading strategy. So I know that I just showed you an entire trading strategy, right? And I know I showed you 2 winning trades. But the reality of trading is that you are not going to win every trade. The strategy I just showed you will have losses and even have losing streaks. And professional traders have the ability to continue trading a strategy through losses and through losing streaks, whereas 90% of traders cannot find a way to do that. So right now, what I want to do is give you 3 things that I used in my own personal trading in order to master my trading mindset and to continue staying disciplined to a trading strategy through losing streaks or drawdowns. But first, let's talk about the 2 things that matter when it comes to discipline. Those 2 things are, and imagine them being on like a teeter-totter. I don't know if that's the word, don't make fun of me. Imagine them being kind of on a scale, right? The 2 things are fear and uncertainty, and confidence and belief. These 2 things are what determine how disciplined you're going to be to your trading strategy, to your entire trading plan. So the practical step to take is to try to increase belief and confidence and decrease fear and uncertainty. So the first way that I did that was by starting to backtest my trading strategies. So backtesting is not sexy. It's not something most people want to do, but if you think about it, it's something that can decrease uncertainty because you're seeing something work in the past through drawdowns, and it's something that can increase your confidence and increase your belief in a specific strategy. Let me give you an example of this. If one of your buddies came up to you and said, "Hey, dude, I went horseback riding with Drake yesterday," you'd probably be pretty skeptical and probably think that didn't actually happen. But what if you were there and you saw him go horseback riding with Drake? At that point, you would believe it. Backtesting is the same way. I just told you a strategy, and no matter how much you trust me, you should still go see it for yourself. You could trust that friend like crazy that told you he went horseback riding with Drake. That's still a pretty steep ask for you to believe that he did it without having any proof, without seeing it. So what you need to do is go backtest the trading strategy, because that's similar to you seeing it happen yourself. When you backtest, you'll be able to see the trading strategy that you're going to trade. This one specifically, if that's what you choose, go through losing streaks and drawdowns and come out the other side of them still being profitable. So number 1 is backtest your trading strategies. Now, there's a link in the description and on the screen to a full beginner's training course that I did that's absolutely free, and it'll walk you through the backtesting process. Check that out if you'd like to. Number 2 is risk management. So whenever we're trying to decrease fear and decrease uncertainty and increase belief and confidence, this mostly goes into fear and confidence. In order to raise confidence, what if you were to lose less money on a trade? You would definitely fear it less, right? If you're risking 100% of your account, you're going to be in loads of fear. You're going to just be completely emotional about that trade. But what if you're only risking 1% of your account? Now that fear is decreasing. And as that fear decreases, your confidence and your belief is going to naturally rise. Again, imagine these things on a scale. So tip number 2 is going to be to use a proper risk management plan. Now, I can't tell you what to risk because that's not up to me. You need to decide your own risk tolerance. But if you use a proper risk management plan, again, it can kind of move those scales further towards you being confident and having belief in your full trading plan and decrease the fear and uncertainty that you have through the process of risking less money on the trades that you place. And the third and final way to increase your belief and increase your confidence and decrease that uncertainty and fear is going to be through experience. Now, I don't necessarily suggest doing this with a real account, but if you want to start a super tiny account and experience your full trading plan. Now, this comes after creating a full trading plan. You already have a trading plan. You already have a strategy that you've back tested and seen that it's profitable and seen it go through drawdowns and come out profitable on the other side. You already have a risk management plan that you're sticking to. Now is when you can start to have experience in order to increase belief and confidence and decrease the uncertainty and fear. That experience can be done one of 2 ways. You can either do this for a couple of months with a tiny account, or if you don't want to risk any money at all while you're going through this process, you can just do this on a practice account, on a demo account. You can take that full strategy you've already tested along with the risk management plan that you've decided to use and use those things in real markets to gain experience. If you do this over the course of 60 to 90 days and you see that in that small account or in that demo account, you come out profitable, that is going to do a major amount to increase your confidence and belief and decrease uncertainty and fear. And what we're attempting to do, imagine these scales, is get uncertainty and fear all the way down and belief and confidence all the way up. And if we can do that, then you will no longer have an issue switching strategies, changing your risk management, moving your stop loss. All the things that happen in the 6 inches between your ears will be fixed if you can do those 3 things. Don't forget to check out our completely free beginners course, which is linked in the description, and you can catch it on the link you see on the screen right now. If you're ready for some more advanced training, feel free to check out the details of the TTC Forex University. We currently have some space in that program, but it normally runs out pretty quickly. It's the top link in the description. I really hope you got value out of today's video. If you did, be sure to click that like button. Be sure to subscribe if you are new. Leave me a comment if you made it all the way to the end. My voice is completely gone, so I am done. I'll catch you in the next video. See you soon.